Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. Most of the majors lost ground against the dollar today in European and basically consolidated North American trading, as most of the pairs moved down aggressively to test significant support and resistance levels. Frankly, it was nice to see a little bit of movement in late European trading today. Heading into tonight's trading, we have the release of the Australian CPI report, which is expected to come in at 1.6%, followed shortly after by the Chinese PMI report. Both of these reports could add fuel to the fire or help create a risk relief, and we could see the pairs pull off their current levels. Let's take a look at the pairs that would be influenced the most by the release, and we'll start with the New Zealand USD and the Aussie USD crosses. And the first pair, the New Zealand USD, as you can see, it broke below the 50 fib once again at 0.8132, but stopped promptly right at the lows from last week, which was the bottom of the resistance levels that I had spoken about and written about on the blog. The bottom of the level comes in around 0.81110, and this level has held the pair up so far in trading, and with depending on the data release, we could get a bounce from this level, and I would wait to see a break above the 50 fib at 0.8132, and if that does occur, we could see another pushback higher, but we initially see resistance right away at 8145, but then 8145 then followed by 8184, and then if we break that up to 8235, so there is a lot of resistance layered at these levels, but if we do break below, there's support right below at 0.618 around 8080. Now the real move could occur if we do manage to break below 8180. 0.8080, we could see a move down rapidly there isn't much technical support below, and we could see a move down to 80, then followed by 7910. But we need to watch consolidation, and I would wait for a break above or below the 50 fib, break above the 50 fib or below the 8110 level before I would be interested in making a trade following the data. The next pair I want to take a look at is the Aussie USD, because you can see the Aussie USD broke below significant support today that has been holding it up for the last two days, and the pair broke down rather rapidly, but did find resistance at the ascending trend line that has capped the pair's price action for the last week or so, and apparently support comes in right around 102, let's say 102.40. We'd have to get a break below 102.40 to get momentum, just to get down to the lows from last week around 102. If we break below 102, though, we could be on our way towards the 101.5 level. What I would be looking for, though, is if we get a break with this level, push up to 103, and if we get above there, we could see another push up to the 50 fib at 103.86. The next pair we're going to take a look at is the Great Britain bound USD. As you can see, this pair broke below the descending trend line that had contained the price action today, but it stopped right at the 50 fib. Now this is where the question mark remains. If we're going to get buyers to come in at this 50 fib and see another push up higher in the short term, where we could find initial resistance basically at the 0.382 fib at 160, then 160, then we could see a push higher heading into the week. But if we don't and we see a break of this 50 fib, then I would assume that the trend line is the ultimate trend is for a push lower, and initially I would continue the thought looking for a move down to the 0.5805, which happens to be the 0.618 fib level, basically 158. The last pair I want to take a look at, just because everybody's interested, is the EURUSD. As we can see, we spoke about yesterday, it sat on the trend line, broke below the trend line, and now promptly moved down, and it stopped exactly at the 200-day moving average on the 4-hour chart, which comes in around 129.50. A hold or break of this level probably isn't going to be the end of the world, but if we do break below this level, we could see a push down to the 128.49. I'd keep my eyes on the 130. If we move up to the 130 and 130, based on the price action there, a push back down lower could resist. If we hold there, we could see a push lower towards the 128.50 level. If we get a break back up, though, we could be heading back up to the and the first level of resistance would be at 130.73. So as we can see, heading into tonight's trading, we have resistance across the board, and we could see pairs consolidate heading into Asia, but then with the data, we could say it'll be interesting, the price action for a move higher or lower at the significant resistance levels we have in the pairs. All right, everybody, this is Currency Watch, and this is Chris Keene from A Keen Point of View. Remember to keep your trades keen and play it safe.